Everyone, welcome back to the TraderLion channel. This is Richard and Ross, and today we're continuing our America's Greatest Companies series and talking about Chrysler, which is one of Bill O'Neill's first big winners back in 1962. Great classic cup and handle example. And I think the story behind the stock is also really interesting because this was actually happening right during the Cuban Missile Crisis. And Ross, if you scroll down a little bit, you can see that Bill in the notes here talks about how the kind of uncertainty around that situation caused that shakeout within the handle that Chrysler acted really well during. And once that was resolved, this stock really took off from 15 to 34 in just under 4 months. So it's interesting kind of how the fundamentals and the kind of world news that was going on at that time impacted this stock's price. And this company, Chrysler, at the time wasn't just an auto manufacturer. They were also producing basically defense machines and rockets for the military. So that just increased and added to the stock story and potential. So Ross, why don't you get started and talk about the cup with handle and how Chrysler dealt with that huge selling correction that we can see from the Dow Jones.
Yep, I mean, and you see here. I mean, before there was a whole lot going on, I guess, if you were in the stock market, right? Because not only do you have the Cuban Missile Crisis, which ultimately creates that shakeout in the handle after the stock ultimately bottoms here. Apparently, this sell-off, and back in '62, this sort of steep break is a lot bigger than it's. I mean, the ranges today are ridiculous, but that was caused by as we can see at the top, big investigation into the mutual fund industry.
Right.
We finally got the bottom, and then you can see we got the volume drying up on the downside and really showing up as it builds the right side. And like you said, as the then we had the Cuban Missile Crisis get underway just a few months after that. We get the shakeout in the handle, and you don't have to guess anything along the way. Yeah, it's all sure you can find some early buys on the way up, but this is, like Richard said, this is your classic cup and handle breakout. All you had to do was wait for the stock to break out, buy it anytime it was crossing its pivot point, the high of the handle there. If you want to get really fancy, you can draw a declining tops line over the highs of the handle and sneak your way in through there. Bill would do that as long as the volume's there. But like you said, Richard, I mean, not only were they, one of the big leading car manufacturers of the time, pumping out vehicles for the military, they were apparently making a ton of stuff during that period that helped fuel the earnings and the big move higher. And here you go. As long as you were there and paying attention, and you bought this right as it crossed its pivot, you can see you got a nice liquid stock here. Like your typical leader, like we talk about in so many other cases, this thing respects its 10-week moving average until, all the way up until this point where you've almost got a double in effect here.
Right.
So it's classic all the way from bottom to top. You've got the cup and handle breakout. It was very easy to buy. You've got tight action, 16 weeks up in a row, which is typically a sign of strength. So you've got a close eye on it as it consolidates for its first time. I would add this in here. Typically, when a stock like this breaks out and shows this sort of strength, you want to buy its first pullback to the 10-week moving average or a 50-day moving average. So even though we don't have an arrow in here, this is a very legitimate spot to try and accumulate some stock right when it's pulling back to the 50-day for the first time. You might have even we can't see what the difference between the 10-week and the lows of this week are, but you're close.
It looks close, yeah.
Right. So there's nothing wrong with trying there. But in this spot here, not to mention, you can see we've got the volume taper off on the downside again. Oops, right. I think we're looking in the wrong spot.
Yeah, right there.
Here it is. Yep. So you've got really constructive tight action moving into the 50-day. You can buy it off the average, and then again here. Super powerful breakout, a liquid stock. You can just keep it really simple, wait for the layup, breakout, buy a textbook, and you can, if you missed it here, you can begin a position here. You're only at a second stage base here, so still early enough, or this is a great place to add if you've already got a position on from back at the original breakout. Then the stock basically almost doubles 15 to 34 before we finally get some stalling or churning action where you can sell all or part of your position, depending on how you, what your objectives are, how you manage your stocks if you're a position trader and believe this is still has some more juice behind it. Since we're just building a second stage base here, maybe you're holding all, or maybe just part of a position using some longer term moving averages, like a 200-day or what have you as a sell stop instead of the 50-day, which isn't unusual. We don't have the average here, but my guess is the 200-day moving average on this still has you pretty profitable if you wanted to try and hang on for, a little bit more than this, which is still a huge run, basically a 4-month run. You've got a double, but regardless of what you do, whether you sell half or all or none of your position here, the stock ultimately shakes out below its 50-day moving average for a few weeks, or 10-week line in this case, because we're looking at a weekly. And you can see here, we've even got, if you were to draw a declining tops line here, you've got the big volume pushing up, as we talk about a TraderLion consolidation pivot, right? Or your early entry where you can start wiggling your way in before the stock gets up near your, textbook breakout or entry area. Typically anything, I look at it this way, your regular base breakout in general, your textbook rule is within 15% of the prior high. So anything lower in the base, I'll tend to look at as a consolidation pivot, as opposed to a regular, proper base breakout. And it's, if you want to take a little bit of art into it, I'm sure there's going to be cases where, on a case by case basis, maybe there's a stock that's 17%, not exactly 15 or 18%, that we might still consider, depending on how it got there, where it is, that whole sort of thing. Because I know people will want to know, there's a difference in the volume requirement, right? So I'm just pointing that out there. But anyway, at this point, even if you didn't start early here and you sold, you're buying your stock back almost where you sold it, or pretty darn close. Even if you had waited till the close on this day and this week, and waited till the end of the day on Friday, you're still buying it back just a tad higher, and you're not having to beat your brain up and sit through this and figure out what's going on. You can move on to something else for a few weeks, buy your Chrysler back, and you get a nice solid move out of that again in a short period of time, almost vertical. You notice here, back here, you're a lot closer to your 10-week line during this move. And here angle goes a lot more vertical. There's a lot more space in between the 50-day moving average and the lows.
And Ross, I actually have a question.
Yeah.
So during that cup of handle, it's straight off the bottom, off the 10-week. Do you think that's why it kind of has to pause after breaking out for those two weeks before ultimately carrying on? Do you think it just had to shake out some of those wicker holders who bought it straight off the bottom because of that kind of flaw? Yeah, absolutely. It did. Yes, it went straight up without really taking a pause. So yep, any time that happens, in this case, it actually, I think it took a little time. It didn't exactly, you couldn't say it wedged here. But and even though you've got week after week after week, anytime I see that straight up, almost vertical move, a lot of space between here and your 50-day, without any breather in between, I will typically wait, or if anything, put on a much smaller position and be prepared to deal with it accordingly. And especially in this market, I think, as we've discussed probably the last year or longer, the breakout and then the re-breakout a second or a third time seems to be a lot more common than it used to be. A failed breakout before used to raise more warning flags than it does now. Now I just look back, and if it matches the personality of the stock, I don't worry about it too much. So, but yes, this is one of those cases where even if it had gone straight to new highs without ever taking a breath, I would always keep it to a minimum and expect a retest or even
fail and re-break out one, a second or third time.
Yeah, I was actually talking about the cup without handle, the further on in the run.
Up here.
Yeah. You see how it's straight off the bottom of the 10-week.
Oh, first. Yeah, absolutely. And to be quite honest with you, this I would miss. I'm not a fan of this straight up from below the 50-day. Maybe on the daily, I would change my mind. I'd have to see that happen. Unfortunately, we're looking at Chrysler back in 62 and we can't,
look at the daily. Yeah.
We don't have access to that historical data. So it would depend, but in general, yes, that's straight up off the bottom. And I'll be honest with you, I might wait for it and miss it here because you'll notice it. You got a cup without handle. It just breaks out. If you didn't buy it, unless you, were trying to squeeze your way back in off of a short term, like a 10-day moving average or 8-day or whatever it is that you use, or that stock in that we're talking about respects. So, whatever one it was, maybe Chrysler respects its 10-day, many do. If you missed it there, yeah, that's when you've got to, so at that point, you've got is it a stock that you're in that you really view as a big leader, that you got a little bit queued on, you didn't buy enough, maybe only bought a third or a quarter of a position, maybe thinking it would retest, and now you gotta, but it's not wrong to squish yourself back in off a 10-day moving average and just use that on even on an intraday basis until you get up and running on it, so you don't, lose out. I would tell you, it's not, that would be a more advanced thing to do, but Bill wouldn't hesitate to, let's say he tried to play a chart like that and it did the 25% instead of the 75%, and he needed to figure out, how to get that stock back in the portfolio, that, so not ideal, but yes, I'll be honest with you, that I would tend to stay away from myself and then, be forced chasing it a little bit.
I guess it's good to point out here that it's actually right at the follow through day. I guess there's a correction in the Dow, so that could be a reason why it's so powerful off the bottom. So that changes circumstance a little bit, because if the market is also really recovering quickly, the leading stocks are going to do this. And if it's a former leader, it had a strong prior uptrend and showing relative strength, that's okay. That's straight off the bottom. That might be an opportunity. That might be a time where I personally will squeeze into something, even if it is.
I'll tell you this:
so fast at the bottom.
It's tough. You on a daily, you might on this week or this week. Like for example, if you just look at last week on the Nasdaq, Thursday and Friday, it lifted. It held tight sideways.
Yeah.
So you have to see that on the daily. That doesn't show up on the weekly. So at some point on there, going back on the daily, there might also be action on there that would give you
a way in. Yeah.
A way, or a reason to think that it would work. And then, like you said, the fact that there's a follow through day there. So it's tough to tell with just the weekly and not all of the, knowing that there's a follow through day, it changes it.
Right. And we were talking earlier before we started recording about the kind of change in slope from this uptrend to when it ultimately continues and then finally reaches its peak. You can see a definite change in slope between that run to now moving on to March of 64, all the way up to when it tops in looks like October or November of 64. Mm-hmm. It's a slower slope. It's a little bit wider and loose. There's those kind of key character changes. You do get a little bit of a nice run at the end, but it's definitely different and a different environment, a different stock than when it was first breaking out at 62.
Absolutely, and it's classic leader to me in so much as if you did nothing except, and in many cases I'll hold most of a position until I'm forced out of it. So let's say in this case you didn't sell into, or you only sold a third again, or a quarter, or just a small partial into this, and you're still holding a ton. Even if you get kicked out of Chrysler here after buying it here and here and have to buy it back not the end of the world to buy it back, a few dollars higher. Then and again, you can do it. You don't have to catch it every time. You can wait all the way until here. You've got an outside day down and close.
An outside week.
I'm sorry, that's right. More important, outside week down and close, and then an immediate undercut. So you're easily out. It gives you an easy out here. And if you do buy it back, it continues to do the same thing. Even if you miss the stalling day, it easily gets you out of that stuff. Profitably. There's really nowhere, if you were buying the stock properly along the way, that if you waited for the 50-day moving average, and honestly, that's considered a longer term moving average. Some of us, again, looking on a daily, might choose to be out of that stock, partially or all of it below its 21 or 21-day simple moving average or 23 exponential. So that's the beautiful thing about the big liquid leaders with a great, the fundamentals behind it, a great story, and especially the institutional sponsorship. That's what keeps them above those, logical areas of support and major key moving averages, I should say.
Absolutely. And when it ultimately tops that week, what are you kind of seeing there that might tip you off that that's the top, or really you would actually be waiting for the 10-week to take you out in that circumstance?
I probably would, or if I saw this straight up move in that big, that big pickup in volume and close below, but
it's not obvious. Yeah.
It's not, because you're still, I don't know what it is. You're still closing fairly well up off the bottom. So yeah, in this case, I'll be honest with you. I'm not seeing enough there to be proactively selling a ton, if any at all. I'd probably be forced out below moving averages, 50-day or earlier, depending on, where I bought it. But yeah, it's that one's a lot harder to notice than this. This is a significantly uglier stalling week than this. That's a little harder to interpret, I think.
Absolutely. And I guess obviously we should mention down below, you can see the earnings numbers during this run. Really strong earnings, over 50% a lot of the quarters, and it after it ultimately tops, you get another quarter of very strong earnings. So that's why it's so important to listen to the technicals, not just look at the numbers and wait for those to turn sour before getting out of a stock.
Oh, and you can bet your butt the broker. I wish Bill was here for this. It'd be interesting to know, but I bet you the brokerage firms were upgrading it, and the news was all bright and shiny, and I'm sure everyone was pointing to that quarter of earnings, and that was it.
Right. All right. Is there any more key points that you think we should talk about on this chart?
No, I think that about does it for Chrysler. I think we did all right for no dailies.
Yeah. Well, hopefully for the future videos, we'll have access to the dailies on MarketSmith. We can really look at it at a more granular level, look at where the key moving averages, the short term 21-day, 23 EMA might shake us out or get us back in early in the future. So thanks for watching. If you enjoyed it, please go ahead and leave a like down below and subscribe if you're new to the TraderLion channel. And we'll see you guys in future videos.